Pay me, pay me, pay me my silver now. Pay me or go to jail. Pay me my silver now.
Bix Weir, roadrunner.com with your morning horn disease, your sip of just coffee. We're down in San Diego celebrating Paige's birthday. Happy birthday, Paige. We had a big party on the beach planned, but unfortunately, Hurricane Hillary, appropriately named, came through and it rained on us. Here, let me show you what San Diego looks like. There you go. Looks fine to me. It wasn't much. It was a big rain event, and I'm sure certain areas down here got flooded. Excuse me. But nothing really big. Bigger things were happening in silver. Over the weekend, on Friday, I published a discussion I had with Andy Scheckman talking about the gold-to-silver ratio, where it should be. I think that's the most important thing when looking at silver price, is not necessarily what the price is, but what the gold-silver ratio is. Historically, it has been determined by people and governments since the beginning of time. It used to be the most important thing they looked at in relation to trade and goods and money in certain areas. And it ranged anywhere from 2 to 1 to 16 to 1 to 20 to 1, in that range, when it was mandated by government. Because the government can get away with just so much. And sometimes it's not even the government. Sometimes it's bigger players in the market. Rarely is it the people determining the gold-silver ratio. Rarely is it supply and demand that determine gold-silver ratio. Now, supply and demand can affect it because it's mandated by the government in the beginning, all the way up to 1965, when, I would say 1971 when the pseudo-gold standard was ended, but definitely 1965 when we went off the silver coinage for the United States of America. Everybody went off of silver coinage. And then it was, quote, free market ratio, which is a lie. In early 1970s is when Alan Greenspan implemented the first trading programs to his electronic business invention. Yes, he invented banking, electronic banking, back in the early 1970s, going back to the 60s, where his best buddy over at Dartmouth, what's the guy's name? Now I'm blanking. The guy who invented basic computing. Anyway, they were buddies, and Alan Greenspan took over the financial side of computing. Yep, it's all true. Go to roadrunner.com. That's why he was put as head of the Fed. Everybody wondered in 1987 when Reagan appointed Greenspan as the head of the Fed, because he was the biggest gold bug on the planet. And it was all part of the control mechanism, the rigging of the markets. God, this guy's name is just sticking in my head because it's important. Basic computing. Sorry. It'll come to me probably before I get it. Let's see. It was a guy named Basic Computing. What is computer? What? Basic. John Kimeny. I told you it was going to be John Kimeny. He's the guy who invented the first shareable computer program. Alan Greenspan ran with it, and it's important to understand that price of gold and silver have not been freely traded. They historically were always set by the government, sometimes by the large traders in the area, but never freely, never based on supply and demand, really. And that's what I think we're getting with the crypto blockchain technology. We can get to a world that is completely decentralized, and the decentralization is the key. It's interesting. CBDCs can really work. Would be really great if they were all decentralized. None of them will be decentralized. None of them will be open source software. None of them will be a finite amount of coins you can ever make. All of them will be controlled by the government that issues them. That's the big problem. that's kind of what we have today. We have electronic money. Anyway, go listen to that discussion. The price ratio to gold to silver, to me, it's below 3-to-1. And I explain why it should be below 3-to-1. And that is not a government mandate. That would be the true availability of investable silver to investable gold. And that's even based on what only based on what guys like Jeffrey Christian say is the amount of gold available, about 6 billion ounces. Don't forget, there's 6 billion ounces of silver available as well, supposedly, potentially, that could come into the investment world. That's a 1-to-1 ratio. So go check that out. It's a great discussion. Andy has some great insight, and we get to the root of where silver will end up. Because everybody wants to know, Bix, when are you going to sell your silver? I'm not going to sell my silver. I'm going to trade it for a better investment. But to get to that point, we got to get down to a ratio well below 7-to-1. I mean, it's coming out of the ground at 7-to-1. It should be closer to, because 60% of what comes out of the ground goes right into industrials, so that's gone. So it's really not 7-to-1. It's more like 3-to-1, and then there's reasons 3-to-1's even too high. So we will see what happens. Also, a really good, excellent discussion posted by Palisades Radio, a guy named Michael Lynch, who I've read his stuff before, a really smart guy, but he really digs into the Silver Eagle issue. He didn't mention the Road to Ruta interview. I don't know if he's heard it. If somebody has the ability to get a message to him, tell him to go to roadtoruta.com and listen to my interview of the head of Silver Eagle Sales, and it'll confirm basically what he's saying here. Jack Sermon, the head of Silver Eagle Sales, it's over an hour long. Everybody should go check that out. There's a few things he does say, and one is that the U.S. Mint, the head of the U.S. Mint, Ventures Gibson, who works for Janet Yellen, told him to sell as few coins as possible years ago. And it comes right in line with what Michael Lynch is pointing out, that, oh, by the way, Blackrock controls the silver blanks at the U.S. Mint through their ownership in A-Mark and Sunshine Mining. So yes, there are so many conspiracies to go down when it comes to silver in general, but that's a big one, very big one. So go check that out. What are we doing? Right now we're at $23.10. Looking for where is the gold silver? Right now they're going after the moving averages is 23.30. So as you can tell on the 1 day here, it got right up to 23.30 and gets slammed down. When it breaks that significantly, that's when the shorts will try to go long. And it all depends on if the commercials sell into that buying pressure. So hang on to your hats. This could be the end game. I don't know. Don't quote me on this. Tomorrow's the cutoff. So I would expect it to be hovering, and then after the cutoff, Wednesday, Thursday, Friday, we'll see which way the next week's going. But right now, as you can tell from this is the manipulation chart. It would be the last month, bang, down, until it broke all the moving averages right here, and now it's starting to move up. So just keep an eye on that. Once it breaks through that, it should move pretty fast into September, which is crazy. So hang on tight. Yes, September is what we're looking for. Not much going on as far as the open interest, 136,000 contracts. Interesting, 50 million ounces still available. We've been here before, though, for the September delivery month. 50 million ounces is 250 million, or 50,000 contracts is 250 million ounces of silver that could stand for delivery today. Remember, they flip over these come the end of the month. It'll be down probably below 10,000. Yeah, below 10,000 is 50 million ounces. That would be a huge month. Not all-time records are like 80 million ounces. An all-time record, I think, is 85 million ounces. So we'll see what happens. Also, the U.S. Mint, it looks like Jack Sermon was exactly correct. They did bump the amount they made, and they did it at the kind of the beginning, middle of May. They are going to do about 2 million coins September, October, November to put us right below about 19.5 million silver eagles. Remember, they're supposed to make coins in quantity to meet demand, and it wasn't until the removal of David Ryder, the guy who put the notch in, and worked for Honeywell on technology to scan the crystalline structure of every coin so you can identify each specific coin to a person. That's the future of money in the United States of America. And the notch is either, they can scan the notch. I don't think it's scanning the notch. I think the notch is a placement holder so that a reader can read the coin exactly and line up the notch. Can they do that with new coins? Yeah, it's easy. You just file file up one of the reads or two of the reads and you got the same thing. Not sure how this is going to go down. Clearly something is happening. That's how I got to run. We'll be back on track tomorrow, but definitely listen to this discussion. Michael Lynch gives great information on the law of what they're not doing and the people behind the Blackrock ownership of the blanks. Completely criminal, by the way, and we all know our government doesn't believe in law anymore. This is not going to end well for anybody who's short. That's why we're seeing this. That's why the shorts are. That's why this slam happened, right here. It's why all this happened. This was 100% because the shorts are trying to get out of the short position. They're trying to give it to the idiots who are actually taking short positions. I do feel for the people, the people who own coins that are hedging their inventories, because they're the only ones probably who should be short, because you got to hedge your inventories, but that's not a big volume of people. So I don't know who the big banks are going to turn over their short to, but we'll find out soon enough, right? All right, that's all I got for you. Go to roadrooter.com. Listen to this three-part discussion. Jack Sermon, the head of the U.S. Silver Eagle sales, tells it all. So go check that out. It's Bix Weir. I'll talk to you guys later.